Well, it's time to take a closer look at our ag commodity markets here on a Monday. Now that we have the trading week well underway, I'm Marlin Bohling with you with a little extra help right in the studio here. Chris Swift is here. He is with Swift Trading Incorporated in Nashville. How you doing?
Doing great, Marlin. How are you this morning?
Pretty good. Welcome to the show.
Thanks, sir.
We're ready to put the closing touches on winter.
Yes. I think today is the first day of spring, isn't it? Today,
well, it's going to be coming up here this week anyway.
Okay.
But it's so close.
Yes, it feels that way.
And a lot of people that I've been talking with in the trade, they say they wonder if that won't change psychology a little bit. Once we get into spring, then they think, springtime, it's almost planting time.
Yeah.
Is that true?
Yeah, a lot of things take place in the spring of the year. We have a whole nother economy that comes out of dormancy during the spring of the year for all of our agricultural producers out there. And yeah, it does. It really does make a big difference when you wake up and it's not freezing cold out there and you start to think about the things that come forward. So
yeah. Well, okay. I want to get your thoughts on the grain trade this morning. Let's take a look at the prices right now. And on the corn board and also on the soybean and wheat board, a lot of weakness this morning. Let's take a look. Here on the corn, we are down about 5.5 cents on the May contract. We have July down 5 3/4 at 3.85 1/4, and now we have December down 4 3/4 at 3.99. That's a full penny now under that $4 benchmark here. Let's take a look at what's going on in the soybean trade here, Chris. And on the soybean trade, it looks like we have the May down 18 at 10.31 1/2, July down 17 3/4 at 10.42 1/2, and we have November 14 1/4 lower at 10.26 3/4. The wheat trade is not too much different than the soybean trade today. Take a look. May Chicago wheat down 10 3/4 at 4.55 3/4. Make that 12 lower now. And July now 12 lower at 4.73, almost on the low of the day. Kansas City wheat, they have really been punishing this wheat market here since overnight. We have May down 21 now at 4.78 1/2. July down 20 1/4 at 4.96 1/4. Yeah, they got some moisture in Kansas, but is it too late? I mean, is it going to help?
Not for a large portion of it, it won't. But to that was on the trend line, whether or not it would survive or not, I'm sure it will help that. And it'll be a couple of weeks before we really kind of find out. This is just the first installment of, some rain that came in, and so us seeing the lower prices is just that first little clinch of the market, seeing some different changes in the fundamentals.
Let's back up a notch and take a look at the soybeans again. Why are they hitting the soybeans so hard today?
I think Argentina got a little bit of rain when they were dry in their areas, so they got a little bit of rain. And, other than that, I think just some weakness, some total weakness. We had a March 31st planting intentions report coming up. We know that it's supposed to be heavily laden towards bean side this year. A little bit less in the corn, but we've got good rains across most of the U.S. and across that corn belt now, and so that'll help for some subsoil moisture if there were any deficits there.
All right, I want to take a look here at the Minneapolis wheat too while we're at it, and then we'll dive into our cotton market for a little bit. Right now on the Minneapolis wheat trade, we have the May contract down 7 1/2 at 6.04 1/4, so it's not immune either. We have July Minneapolis wheat down 6.5 cents at 6.12, and on the cotton market, had some big losses early this morning in the cotton. For example, on that May contract, it is down 149 points at 81.36. That's after it posted a high of almost 83 cents. And July down 135 now at 81.63. We have December 92 lower at 77.36. And you talked about the prospective plantings report coming up, and it's going to be one of the big players, isn't it?
Yes.
Jockeying for acres.
Absolutely, it will be. And I think cotton would like to have some of those acres, too, with the economic rebound that we've had across the world. That has helped the clothing manufacturers and cotton producers tremendously just from that increase in demand.
All right. Chris, we'll be back in just a moment, and we'll take a look at our livestock trade when we come back right after these messages. Well, we're back with you with Chris Swift of Swift Trading Incorporated in Nashville, and we're going to take a look at our livestock trade. All right, Chris, when we went home last week on the futures trade, on the cattle and the hog markets, kind of a mixed affair, but mainly weaker as we wrapped up last week. Then we have this cash cattle market that developed again on Friday, and it had been busy kind of all week long.
Yeah.
And I'm noticing the printed prices on the cash cattle market last week were all the way up to, I believe, 128.50, 127 to 128.50, I believe, on a live basis. You say you're hearing rumblings. It may have been well beyond that even.
130, 132 in some of
Really?
the private fat cattle trades that they have in Iowa.
Really?
We saw some 132 prints, but primarily 130 for the bulk of them. Really interesting trading between the futures and the cash. The basis is exceptionally wide right now. It creates another form of risk to producers above and beyond just the normal price fluctuation. Now you've got $16, $17 difference between a cash price today and a futures price in less than 3 months, and somewhere or another that difference will be made up.
Well, let's take a look at the board then and see what you're talking about here. All right, let's go to the live cattle trade. Here's those prices I was talking about. Cash cattle market, 127 to 128. In fact, I just found a printed top of 128.50 a little bit ago. Dress basis around 205, at least on the published list from USDA. Now let's look at our prices on the futures board. And on the futures, we have the April live cattle down 37 at 120.88. And my goodness, look at that June contract here, Chris, 111.22. That's a steep discount from the nearby April contract. And, you know, April's not going to be around that much longer.
That's right.
Like you were just saying. It's the June contract down 53 cents right now. If we look at the feeder cattle trade, here you have that nearby March contract down 58 at 139.40. I assume, Chris, most of the volume is probably in April here.
That is correct, April, May.
That would be down 60 at 139.60. The May down 53 at 140.42. We started out higher, but we've already turned around. Does that concern you?
Not really. We've been weak for the last 3 or 4 weeks and probably just going to stay that way. We'll have some big volatility this week and next due to that wide basis. There's not that much basis difference in the feeder cattle, so I don't anticipate a great deal of volatility there, but they're still fairly weak. We know that we've got a lot of inventory coming. We do believe that once you get beyond the June-July timeframe, you'll start to see the feeder cattle inventory begin to dwindle just a little bit from, again, all the big hard and heavy pull that we had this winter and this spring.
Lean hog trade. Let's take a look at where it now stands. Boy, a lot of pressure. Everything beyond April showing a triple-digit loss. June knocking on the door, going $2 lower. We have April down 90 at 64.55. May lean hogs down $1.50 at 71.25. June down $1.92 at 77.20. We don't have too much time left, but explain what's going on in the hogs. I thought they were close to support.
Well, the pork cutout just keeps going down, and that makes the index go down, and because the futures settle to the index, the futures don't have much choice but to move down with what the index does.
So what do you look at for support on the hog trade?
Probably another $5 to $6 lower from here. Yeah, we just have tremendous amount of pork production coming, and now we know we've got increased beef production, and it's not so much that we're losing demand in any way, but we are going to have an elevated amount of protein to have to chew through this spring.
When you were here last week, you said you had seen that they were really featuring pork in the grocery stores.
Still are.
Still are. Okay, so that's maybe going to weigh on the beef trade a little bit?
It will. It can't help it any. And of course, till you get after Easter, which will be a big ham season too. We get after that, then you get a natural grilling season for the spring. Spring break starts in a lot of the colleges and high schools. So you get people out moving around just a little bit, and that should help the grilling season. All
right. Well, thank you very much. Good to visit with you again, Chris. Thanks for coming in.
Pleasure.
Chris Swift of Swift Trading Incorporated in Nashville. So there you go, Janet. The stage is now set.
All right. Thank you, gentlemen, both. Appreciate that. Well, now we salute one of the many hardworking farm families that keep this country moving forward. It takes strength, determination, and vision to farm the land, but often these farmers go unrecognized. Shel Rotella introduces us to the Kaufman family in this video from the Idaho Wheat Commission.
So I'm Steve Kaufman. And I'm Jeff Kaufman. We are brothers who farm here in northern Idaho. So we're the 5th generation of Kaufmans farming here around Lewiston. We're farming with our dad and our uncle, who are the 4th generation.
You're out there trying to raise the 6th generation on it, aren't you?
Yeah, they can't wait to get out there and run the equipment.
Yeah.
We have another brother, Phil Kaufman, who farms and is a partner in a neighboring operation. Most people around here are family farmers just like us. Most all the year we don't have any hired employees. It's my dad and uncle and my brother and I working there. We also have during harvest cousins and uncles and other families and friends that like to come out and help out. I like the change of the seasons out here on the farm. You can't beat your office out here. It's just great to look out and see creation and be part of it.
Almost working in unison with it.
Yeah.
Yeah. I'm looking forward to doing this for a long time here, working with my brother Steve. It's been a rewarding year so far, finally seeing all the hard work paying off. As the years go forward, I hope that we're able to share the same experiences that we enjoyed growing up with our younger families and pass that on, hopefully instill a love and appreciation for this work.
Looking forward to working with you, bro.
That's right, everybody needs fed, huh?
Yeah.
Joe Rotella's Salute to Farm Families continues through the end of March right here on the Market Day Report. And you can learn more about the company by going to its website, rotella.com. Well, join RFDTV's Country Club to watch your favorite shows online. For just $10 a month, you can catch shows live or 24 hours after they've aired. Our on-demand library has current seasons and previous episodes of popular RFDTV shows. Join for just $10 a month or $90 a year. Head to rfdcc.com to sign up. Well, we've got the day off and running. Of course, Marlin and Chris did a great job sort of offering some insight for the day.
Yeah, nice to have in-studio guests. I wanted to take a quick peek here at the soy meal. Sometimes that can offer guidance on the soybean trade. Sharp loss in soybeans. Well, the meal is mixed. The May, though, down 960 at 363.30 per ton. And also on canola, a lot of times it'll follow one or the other. We have July canola down 230 in Canadian currency at 526.10 per metric ton.
All right, thank you very much. Well, producers spend millions of dollars to power farms across America each year. The biggest energy users and ways to reduce consumption in our next half hour.